Hello and welcome back to Live from Paris. I'm joined now by Matthew Warren from our business desk. Good morning, Matthew.
Hi, Lorna.
So, French and German politicians are meeting in Berlin this Tuesday to celebrate 50 years of Franco-German friendship. But you've been looking at the economic relationship between the two.
Yes, that's right, because of course the political relationships between the two countries are critical for the EU, but also these two countries are the two biggest economies in the European Union. The German economy in the 2011, that's the last year we have full figures for, is worth 2.6 trillion euros. The French one not far behind, 2 trillion euros. Germany is the third biggest exporter in the world after the US and China. And there's a huge amount of trade goes between these two, about 150 billion euros of trade, in fact, between France and Germany. That puts it also almost on a par with the UK and the US, which have similar amounts of trade as well.
OK, and there has been a little bit of Germany trying to teach France economic lessons recently.
Yes, and not sure how well that's been going down in France either, but there's been a lot of noise that's been both from politicians, also from newspapers. The German tabloid, the Bild Zeitung, biggest circulation tabloid in Germany, even ran a news story last year saying that could France become the next Greece? Now, that's all over worries in Germany expressed over whether France has done enough to reform its economy. And one of the people who's spoken a lot about that is the former Chancellor Gerhard Schröder. He talked a lot last year. Even yesterday, he was giving an interview to Le Figaro. You can see there, that headline is Germany is waiting for France to do its homework. I think that's a good translation of that. And it's the kind of reforms that he put in place 10 years ago that were all about making Germany as competitive as it's become today. Well, it's not just German politicians who think that perhaps France could learn some lessons from their own reforms, but also some business owners as well have the same view. This report from Josh Vardy.
They may share a border, a currency and a firm official friendship that marks its 50-year anniversary on Tuesday, but France and Germany's economic paths diverged considerably in the past few years. In many ways, the figures show strong links. Over 2,000 French towns are twinned with German counterparts. Over 100,000 French people live in Germany, with relatively the same amount of Germans living in France. There are 3,000 German companies in France, 3,700 French companies in Germany. But while Germany's trade surplus for 2011 was 158 billion euros, France grappled with an immense deficit of 70 billion euros. This warehouse in the German border town of Freiburg has 700 employees, but no unions. The foreman says he finds French attitudes towards the economy worrying.
We experienced the same crisis in 2008 like in France, but in Germany we've had a real understanding between employees, unions, entrepreneurs and political players.
This man comes from the border region of Alsace. With a foot in both cultures, he says while Germany and France can learn from each other, they shouldn't get any closer.
I don't believe we should imitate each other. You have to take what we think's good from each other's systems, whatever's the most effective. Keep the good things we have. I don't think we should imitate.
In the boom time of the mid-2000s, France and Germany seemed neck and neck, but as the Euro crisis rolls on, 50 years of friendship is starting to look more like an unequal partnership.
Josh Vardy reporting there. Now, Matthew, finance ministers from across the EU are going to be meeting together this Tuesday.
Yes, that's right. Ministers from the 27 European Union countries will be getting together in Brussels. And one of the big issues on their agenda will be this financial transactions tax, a levy on transactions around Europe. Now, 11 countries in Europe want to go ahead with it, and they say they will do so themselves, but some are against: Britain, Sweden, the Netherlands, for example. But those countries, four, including France and Germany, say it could raise over 50 billion euros. Now, if that is approved this Tuesday, that tax could be in place within a matter of months.
OK, well, we're going to move out of Europe to Japan now, because they've had a two-day meeting of their central bank, which has just finished.
Yes, that's right. And markets were very interested to see what came out of that meeting. Now, the bank in Japan, the central bank, has promised to take action to do what it says aggressive action to boost the economy. Now, one of the things it's done is set a 2% inflation target. Now, the reason that's important is because inflation is much lower than that. Setting a higher target means they can do a lot more to try to stimulate the economy. Now, the bank's been under a lot of pressure from the newly elected government in Japan to take this action, which they have now done. But that has also caused some other commentators to express concern. One of those is Jens Weidmann. He's the head of the Bundesbank in Germany, and he has talked about alarming infringements such as the action by the Japanese government, which threaten an end to central bank autonomy.
Okay, well, how did the markets react to that news?
Well, first of all, the Nikkei had a bit of a choppy reaction. First of all, it was quite pleased to see that, but ultimately it slipped back again, and that's how it closed the session, just down under 0.5%. The Shanghai Composite also falling in Tuesday's session. Here in Europe, markets are just opening, and so I think it's fair to say they're opening pretty flat, all slightly down, but we'll see what the rest of the trading day brings.
Okay, well, we're going to say in Asia and China, because they are known for their developed export industry, and now they want to add movies to the things that they're famous for.
Yes, because the Chinese are getting more and more fans of going to the cinema, second biggest grossing market after the US, and 10 new movie screens opening every day in China. But home-produced films are not keeping pace with that growth. Well, now, as Katerina Vitozzi reports, there are plans to change that.
We've had the lights, the cameras, now the Chinese government wants action in its movie industry. China is currently the world's third largest producer of films. Now Beijing wants it to rival Hollywood. Last year, China made 900 films domestically, but only a fraction of these were exported.
China's film industry lacks experience in making, producing and promoting movies. Over the past years, the industry has been making up for these shortcomings through cooperation with international film companies.
In the domestic market alone, there's plenty of potential. China opens 10 cinemas every day. Last year's ticket sales topped €2 billion. But Hollywood blockbusters still dominate, despite a government quota on how many US productions can be shown and financial incentives for cinemas to screen films made in China.
I watch a lot of domestic and foreign films, but I prefer foreign ones. I like their action and sci-fi films. They're very interesting.
Critics blame government censorship for Chinese films that lack relevance and genuine human interest. The industry also needs cash. China's two biggest state-owned film companies want to join the Shanghai Stock Exchange. The extra funds could help make more big-budget blockbusters, as well as launch Chinese cinema into 3D.
Well, now let's get some of the day's company news. And IKEA is a step closer to opening stores in India. The country's foreign investment panel has approved a $2 billion project by the Swedish furniture giant. India agreed controversial plans last September to allow foreign retailers to enter the country.
The US operations of video game maker Atari have filed for bankruptcy. The maker of the 80s favourite Pong wants to separate from its loss-making French owner. The company hopes to sell off its assets or come up with a restructuring plan in the next 3 months.
And cold weather in China put the brakes on demand for beer at the brewing company SAB Miller. The maker of brands including Miller, Grolsch and Peroni reported its third quarter sales up, though, 17%. The world's second largest brewer said that strong demand in its Latin American markets helped those sales.
Okay, well, finally, staying in Latin America, a Brazilian fashion brand is trying to turn some bad news to its advantage.
That's right. Now, this Sao Paulo store for the Reserva clothing brand had rather unwelcome intruders who broke in and stole it. You can see in these pictures here, they stole a whole load of products in December. It's all captured on the closed-circuit television, and the store has now turned that into an ad. What they say at the start, these titles that come up say it's not necessary to break the window, just come in. I think it's a good example of them making the best of a bad situation.
That's very clever, but you do still have to pay if you go in that way. Thank you very much indeed, Matthew, for that look at today's business. And that's all for now, but do stay tuned because Stuart Norval will be here with all the latest headlines right after a look at the international weather. That's next here on France 24.